We heard earlier how China Evergrande has filed for Chapter 15 bankruptcy protection in New York as it works to iron out plans to reduce debt and stay afloat. And joining us to unpack the implications for the company and the wider economy in China, we have William Ma joining us now, Chief Investment Officer at Evergrande Group, speaking to us from Ningbo, China. Well, William, it's good to see you today, but Evergrande seeking Chapter 15 bankruptcy protection. This is the tip of the iceberg, or what do you see? Is it an indication of what could possibly be a bigger trouble brewing in China's financial condition?
Well, actually, it's not totally a surprise. If you look at the price action today in the market, as you just mentioned, we are seeing rebound, positive, stock performance in the property sector. If we wind the clock back a little bit, actually, Evergrande kind of like suspended its equity trading, since March last year, to buy time for the debt restructuring. And then in March this year, they announced a restructuring plan, and as well as they announced, their earnings, 2-3 weeks ago. So right now, filing Chapter 15, from my perspective, is part of the restructuring process. And actually, this is a positive news from a broader perspective because, they are dealing with it with a global institutionalized way. I think the more important message or things to monitor is whether they can finish their unfinished project. And this will help resume, the buyer, home buyer confidence, to the whole property sector, as well as the property price. And now it's estimated about 250 to 300 billion renminbi is needed for them to kind of like finish the unfinished project. But I think the Chinese government, PBOC, is doing kind of like support that. They're extending the loan to most, property developer for another, 12 months. So all in all, I think this is part of the restructuring process, and this is welcomed by the market.
Welcome news for the restructuring process, but whether or not there's going to be contagion effects to other sectors, well, analysts are pretty much split about this matter. Some say yes, some say no. Which camp are you in?
Well, I'm in the camp of we are getting better and better compared to the situation late last year and early this year. Because at the end of the day, as the clock clicked by, there is, some disbelief in the market. If you look at the sales volume going down, if you look at the price, going down. But at the same time, as time passes by, there are more and more unfinished houses being finished and delivered to the buyer. The confidence will become back. And I think we are in the middle of it. So as long as, the bank extending the loan, to the domestic developer, as long as their key KPI for this and next year is to deliver the houses, I believe the confidence of the buyer is coming, back, bit by bit.
Okay, aside from confidence, we see other property giants sharing similar fate with Evergrande. Case in point, China's largest private developer, Country Garden, they missed some interest payments this month, further rattling the market. How would you draw the comparison between the two?
I think they are in different stage, if you like. If you look at, Evergrande, they already suspend, the stock trading, in March last year. But, Country Garden is still trading. That's why you see a price drop, if you like. So I would say Evergrande is much in the early stage compared to, in the later stage, compared to, Country Garden. But having said that, in terms of size and scale and everything, most developer in the same cycle. So they are trying to finish the unfinished project, trying to get extended loan from the domestic bank. And this is the key criteria. I think the government has sent a very strong message, no matter the central government or domestic government, delivery, completion of the unfinished project is the highest priority, and they are supportive in this initiative.
I'd like to circle back on your point about the confidence, and rebuilding it takes time. Real estate market will always make up the bulk of China's domestic consumer economy, right? What does it mean for China's homeowners or people planning to buy homes in the future?
Yes, if you look at China real estate and asset class, it's about 60 trillion US dollar. It is the largest, asset class in the world. So from a Chinese, investor and a homeowner perspective, actually, we like property. So I don't think, from an investment perspective, owning a home for us or next generation, this kind of like long-term culture will change. So I believe the confidence is not on the property itself. It's just at this part of the cycle, whether those developer can they finish the unfinished project and whether the government or the creditor will support them to finish it. Once they have finished it, I think, the confidence on the real estate sector will come back. And then the second point is in the medium to long term, I think domestic Chinese investors also realize they cannot put all, if not most of their money in the real estate sector. It's estimated about 80% of people's net worth is actually in the real estate. But over the last year or two, we are seeing when we talk to the investor, in China, they start formulating, they also want to diversify their asset class just from property to other asset classes. That's why you see the mutual fund size in China has been keep growing. I believe this is good for the asset management industry, and this is good from the domestic investor perspective. They don't put all their eggs just in real estate.
Finishing the unfinished business. We'll continue to track this development, but for now, thank you so much for your insight. William Ma, Chief Investment Officer at Grow Investment Group.